Thank you. So it's great to see you here. I think we've been former colleagues for twice over, and I know that you know a lot of people here, but would you be able to share a bit about yourself for the people who don't know you?
Thank you, Simone. Yeah, as you say, we've been colleagues a couple of times, which actually means I used to be a lawyer until about 6 months ago when I took over heading up corporate finance for BW Offshore, which obviously is one of the leading FPSO companies. There are only a handful. And what my team covers is all capital raising, so debt, leasing, equity at project level, our listed equity, investor relations. So yeah, and based living in Asia for over 20 years now.
Yeah, thank you. And I'm the partner of Stephenson who focus on ship finance, so I know that lots of my clients will be very interested in what you are doing. So that now that you are on the commercial side, what the market trends you are now seeing in the offshore sector, and what the opportunities, where are the opportunities you are seeing?
Well, like shipping, offshore is quite segmented. And the offshore I'm talking about is very different to the history and the experience of offshore that the Chinese leasing sector particularly has had, which is in the platform supply, the drilling, and so on. The floating production, and this also would cover regas and floating LNG, are very much infrastructure assets. They are long-term, steady cash flows. They are, once operational, very safe assets. It's a very different risk appetite to what this market has seen. What has happened in the last 2-3 years, and there have been a lot of large geopolitical events which have caused this, whether it's Russia, Ukraine, what we're seeing in the Middle East now, COVID. But, there was an energy crisis. The cost of energy skyrocketed. The demand for energy has skyrocketed. Renewables are not keeping up the pace to fill that increase in energy demand. That means that, and as much as I believe in energy transition, and as much as BW as a group believes in energy transition, there is a lot of work to do in the meantime to get to a sustainable and affordable and secure energy market. And that does mean that we need to continue to produce oil and gas for the next few years, or for the foreseeable future. And around 2 years ago, there were, particularly amongst financial institutions, there was a very strong push towards greenifying themselves, and also amongst energy companies as well. And I think those geopolitical factors hit home quite hard when people were paying inordinate amounts for their monthly electricity bills, and realized actually we need to have, we need to continue this production of oil and gas. And so what we're seeing now in the floating production market, there are 170, 180 units globally. In the next 7 years, we see a demand for another 87. So there's a massive expansion coming very quickly. This isn't necessarily production of new oil. It could be revitalization of fields. It could be replacing existing assets. But it does mean that we're pushing out the future for how long we are reliant on oil and gas. So we see a very, very strong appetite in that market. Now, the challenge we've seen is the increase in cost of these assets, particularly in the last 2 years or so. And that is one of the and that's probably the biggest thing that we need to face. Yeah, and is finding the capital for that.
Yeah, I think as we always say, where the crisis is, where the opportunities are. So here we are at the marine money. We talk about marine money. So may I ask you a question? So what's the biggest transaction in terms of value that you have ever worked to date with BW Offshore?
Well, as I said, the price of these things has gone up. So around 3-4 years ago, we'd have been looking at between $1.5 billion per asset. We're now looking at $2.5 to $3 billion per asset. And I think within the next 2-3 years, we're going to see even $4 billion FPSOs. which is a very, very, very scary number. That means we require a lot of funding, both internally and externally, and from our clients to be able to deliver.
Yeah, we all heard about these huge amounts of the money. So as we are going to talk about these collaborations with all finance parties, so can you please explain to our audience, I think you just mentioned before that, why we need collaboration?
Yeah, well, like any new sector, there's a learning period, both for everyone involved. Now, the Chinese leasing market has not funded a construction floating production unit to date. That means that there is a lot to learn, both from our perspective and our peers, and from the market in doing so. Now, given the numbers involved, we cannot look at a single source of funding per asset, as we may do with the ship, where we've seen leasing companies do fleets of 10 container ships for 200 million each. So we need a multi-way collaboration in the same way as we do in our bank sector. So, for example, when we go to the market to raise debt for one of our assets, we go out to 10, 15, 20, etc. banks. We're going to need to do the same in the leasing sector and have a collaboration between leasing companies, diversify that risk, and potentially look at some form of oversubscription. So if we're looking to raise $1.5 billion, we want to target 2, because like any learning experience, everyone learns at different rates. Everyone's going to get comfortable and get their approvals at different times. So we need to aim for larger to be able to take the risk that some participants will fall out. But with so many leasing companies, and this is probably maybe where you may be able to share more, is how to coordinate that. And an arranger role, which there is in the bank debt. There's a need for that role when syndicating these large leasing deals as well.
Yeah.
Can you share about that?
Yeah, actually, because according to my experience, it will be a quite mature system when we're talking about syndicated loan, because we have the agent bank. We know how to get the loan paid if there's a non-consenting bank. But when we're talking about leasing companies, when we're talking about the financial leasing structures, and we have the multiple owners own the vessel or own the offshore by shares, I can imagine it will be quite difficult, and there are some hurdles that make it quite difficult to say if we cannot agree on the terms. I mean, the multiple owners cannot agree, or what if something goes wrong? I mean, as a lawyer, we're always thinking, what if something goes wrong? Do you have anything to share with us about this when we think it does not?
Well, there needs to be, I guess, consistency and coordination of information. Everyone needs to know the same thing. And there is a role to be played for someone to coordinate that for the leasing companies.
Yeah, like the agent for all the owners.
Exactly.
Yeah.
And as you say, when things go wrong, there will need to be a process, for, and hopefully things don't. But there will need to be a process, voting, which, as you say, with banks and non-consenting banks is a lot easier. But when there's partial ownership of an asset, that becomes very tricky, particularly if one lessor wants to exit. That's something which needs to be worked out.
Yeah, I think everything needs to be planned beforehand, so that will be much easier. And so that, because as you did mention, that many of the audience here are very familiar with finance ships using leasing. What are some of the structural difference in terms of funding the construction of the big ticket offshore platform?
I think that's actually a very good distinction to make, is that we're not looking for people to finance us to buy an asset. We're looking for people to finance us to build an asset. And that, if you get over that ideological hurdle, it then helps everything else fall into place. So how do we pay for the construction? Now, we're not paying normal shipbuilding installments of 20, 30, 50%. We're paying our 10,000 plus vendors monthly. So how do we get the working capital to do that? We're asking for funds monthly ahead of those invoices coming in. So that's a big shift to the leasing market from what they would see in ordinary shipping installments. So the and security-wise, there's quite a big distinction as well. We don't get refund guarantees for 100%.
Yeah, okay.
There might be for 10% of the hull price, so there might be a $50 million refund guarantee. That's not really a huge amount of comfort when it comes to a $2.5 billion project. So there's a lot of work to be done in looking at what are the stages of construction, what are the risks there, where is the funding going, who's verifying that. So all of our financiers would have a technical advisor who would give them the guidance as to where the money is being spent, how does it fit against schedules, how does it fit against budgets. So the security structure is very different. And then there's less control over construction as well. Every month we will need to vary something in that construction because of client demands, because of the evolving facts. So there can't be a blanket restriction on amending contracts. Those contracts need to mature as construction goes on. So the construction side of this is very, very different to a ship, namely because the funding being sought is funding for construction, not for purchase.
So which means that the clients need to get the money advanced long before the offshore platform will be delivered and generating the income.
Yeah, so construction period is, say, 4 years, and we'll be asking monthly for drawdowns for what we'll need to spend in the next month.
Yeah, I think that will also be a challenge for the Chinese leasing companies because they will use the ESPVs, domestic and registered in like Tianjin or Shanghai, those areas where maybe it will be not easy for them to get the funds remitted outside monthly, and so that they need to pay more attention to such kind of requirements. I think that's what our clients need to learn. And other than that, what the other challenges do you see? I mean, other than construction, what the other challenges do you see in the big ticket transactions?
There's quite a few. The first is that these are non-recourse deals. They're looking at cash flows coming in from our clients. In the long run, we aren't giving or don't tend to give guarantees to support that funding. As I said, once these assets are operational, they are very, very low risk. We will get paid, and it's very different to the other parts of the offshore sector. If we don't get paid, we turn off the tap, and our clients stop getting their revenue. And we're in a fairly unusual position in the offshore sector to be able to do that. So, and that's happened in the past. It doesn't last very long. Our clients tend to realize that actually they need to continue paying us to be able to have the oil to be able to make their own profits. So the non-recourse and no guarantee element of it for the long period is quite different. Also, massive amounts of tax structuring go into these projects. So when you mentioned Tianjin, Shanghai, Hong Kong lessors, that's one tiny part of a very, very complex set of tax issues, including transfer of title of equipment, at what stage, when, where, are there sales taxes, things like that. So there's a lot more complexity around the structuring. And one thing which is a very, very welcome development from our side is that we're starting to get quite significant upfront funding from our clients. So we have a project in it which we're building a unit to go into Australia. We have $1 billion upfront from our client, which is very helpful. We have then layered on top of that debt and then project equity. Several of the clients who are giving that funding are asking for security. That's quite straightforward comparatively, except for intercreditor issues, when you have a loan and you can give second security. When you have a lease and you have lease funding, how do you structure in that level of security?
Yeah.
It's very, very possible, but there's a learning curve there as well.
Yeah, I can understand your client's concern, but it will make it difficult because, strictly speaking, the ownership will be with the leasing company. And then if they are going to provide, even if it is second priority mortgage, say the lender will be the first priority, and then your client will be the second priority mortgage, it is strictly speaking that the leasing company will be providing the security for you as the charterer. That will be, that's what.
Yeah, which essentially means that the leasing companies will need to be 100% debt funded themselves to be able to secure themselves, to be able to give second security, which again is a mindset change, and that will come with its own challenges for each leasing company.
But still I think, because today I received a question from a client say, do many financial leasing companies have interest in the offshore industry? What's your observation in this regard?
In the last panel, there was a comment about the size of stomachs, and I think it's a little bit like that. There is a lot of appetite. There's a lot of hurdles. And I think that we are, and hopefully should be at a stage fairly soon to get over a lot of these hurdles. The beauty of this is that it gives financiers the ability to deploy vast amounts of capital very quickly in a single deal, rather than having to do many, many small deals. I think we'll see how quickly we can get there. But it's something that we are very, very keen to explore. We've seen our traditional financiers, so mostly European banks, moving away from the oil and gas business. Those have been replaced a little bit by some other banks, but we do see that the Chinese leasing sector is well positioned, and these are the right kinds of projects for the sector, given the availability of what other assets there are to fund in the market at the moment.
Thank you. Okay, to wrap up, I know lots of our audience here are the Chinese leasing companies. So do you want to say a few words to them about today's topic?
Well, the topic was collaboration, and I think it is that. I think we need there needs to be a lot of dialogue, a lot of working together, a lot of transparency, and it is, as I said, going to need quite a lot of people to do that, a number of leasing companies per project to be able to do that. So, collaboration is key.
Thank you. Thank you.